So thank you very much for the kind introduction. We're going to spend the next half an hour or so talking about what's probably, at least what some of us think is the biggest thing that's coming in the financial services industry, which is the impending token and ICO revolution. And I say revolution because it hasn't happened yet. So you probably read somewhere that somebody spent, I don't know what it was ever, $4 billion, $5 billion, $6 billion in the token and ICO market last year. Most of those people are going to go to jail. But don't let me put you off the sort of general area, because when it becomes regulated, it's going to be huge. It's going to be a genuinely new way of doing things. So we've got a panel for you this afternoon to discuss this from a few different positions. So can I ask my panel to come up on stage, please? Maya, Steve, and Phil, come and... Who's the missing mystery panelist? I know. Oh, that's me. Oh, okay. Yes, all right. Sorry. But this... Okay, it doesn't matter. I'm going to ask them to introduce themselves to you in a moment before we get the discussion going. But I just want to say we're using the question thing here from the app. I call App Britain. That's what the guy should have said. So if you want to ask a question to the panel, put it into the app, and I had to tell it gets filtered for taste and decency first, and then shows up on here. So we don't want to go through that list of words again, but if you just apply your common sense, keep it polite, and the messages will show up here, and then I'll ask the panelists the questions. So please feel free to ask any time, and I'll get the questions to them. So I'm going to start by asking each of them just to quickly tell you who they are and what their perspective on this is. So we'll start at this side. Maya, please.
Hi, my name is Maya Zehavi. I've been in the crypto space for about 5 years when it was still just Bitcoin. And what first got me involved with this is understanding the potential of this tech to radically change and maybe make financial markets more efficient. I spent about 3 years lately in the private blockchain space, and when the ICO hype came to be, I understood that where we're going in order to fulfill this promise of blockchain and cryptocurrencies is actually in securitized tokens. And that's really what we're building in Untiki, a regulated security token blockchain protocol, where we can kind of bridge the gap between the public and the private, make it more compliant, and have these crypto asset classes fulfill their promise really to be and the potential to be a much more efficient asset class.
Phil.
Hi, Phil Smith. I'm a partner in Aller & Overy's capital markets practice. I split my time between a conventional securities practice and also looking at the optimization of financial services through compliant vertical integration, which basically means using technology to make things more efficient to save cost and to expand access to the capital markets. Within that realm, I'm a board of directors on a company called Nivora, who've worked recently on the world's first crypto-denominated bond issue within the auspices of the FCA sandbox. So I'm looking at this today in the context of transitioning from the Wild West towards a more regulated and transparent environment.
And you guys are running a workshop about tokens and ICOs tomorrow afternoon, right?
Tomorrow afternoon, 3:30 till 4:30, there's an ICO workshop that I'll be speaking at.
So if you've received one of the SEC subpoenas, I strongly suggest you go at 3:30 tomorrow to the Grocer's Hall. See ya.
Hi everyone, Sia Hushanglia. I'm a partner at Seedcamp. We are an early stage fund that try to find the best founders from across Europe and backs them with early stage funding and with supports for those early stages of their journey. We are sector agnostic. We've invested actively in fintech with investments in companies like TransferWise and Revolut, but we are also investors across a lot of different verticals, and more recently we started to look at the blockchain space. We were one of the first traditional venture fund that got the authorization to actually invest in tokens with the new funds we closed last November. So far, we've been like staying away from it, actually.
What?
But,
You're here under false pretenses.
sorry?
Have you invested in none of these things?
No, we invested in no token at all, and we are like waiting for the regulator to hopefully like take a clearer stand. But because our fund will be deployed over the next 3-4 years, we think that it will hopefully happen during that time period. And at that time, if we start to see opportunities where we could also add value, we would be interested in potentially investing in some of those token projects.
So I think there's 3 things that we need to cover really for the guys here. So the first thing is we need to say a little bit about what tokens are. Otherwise, we won't be on the same page for the questions and the discussion. I think we need to say a little bit about what the impact of switching to sort of tokenization is. And then thirdly, we need to talk about the sort of regulatory framework for it. So just to get people started, what actually are tokens?
Well, they're not really coins. They're basically a way to bundle up a bunch of smart contract, which is the computation embedded in a particular asset class.
Are the subtitles on somewhere? Okay, give it another try. These people speak English, so
Sorry.
if you could just turn it down a little.
Instead of
Let's
buying
start it
equity
again.
or
That went off the
dollars
road.
or
What are
currencies, tokens are a way,
Shall I?
Yes, go
Shall I?
for
Right.
it.
So I have no tech background, right? So I've got this down to like talking to, well, actually,
Normal people?
my
You know
children,
too much
my
about
children
it.
telling me what it is. They are the digital representation of an underlying claim, a means of payment, or an asset, and the asset could be, in my world, a security, so equity, debt, or something else, right? And the beauty of them is that they transcend boundaries, and they currently sit outside of the world that we know in the sense of it being regulated. That is the beauty. That's also the tension and the problem that brings that follows them.
Your
In that-
children are pretty sophisticated.
Yeah, they are.
Are they Swiss?
Yeah, are they Swiss?
Yeah, well, because they use the
Yeah.
FINMA definition.
Well, we
of
had
tokens,
we had a weekend session on the FINMA definition of tokens, and so you need to think about it in a way of, it's basically the digital representation of something that you would otherwise have in physical form today.
Okay, but the crucial thing about these tokens, as you call them, which is distinct from what we have at the moment, is that there's no clearing and settlement. So if I have a token for something, let's say a chocolate bar or something, and I send that token to you, there's no intermediaries. Like you,
Completely.
it then becomes your claim.
Completely.
Okay. So there are strong theoretical reasons for thinking. You're going to assure the security of these things, right? Because you're going to build them on these cryptocurrency platforms. But there are strong theoretical reasons for thinking that those markets, whether it's security tokens, utility tokens, or payment tokens, those markets will actually be more efficient than existing markets because of that infrastructure and because of the kind of ambient accountability you get from the blockchain.
The theory is that you can dispense with a large part of the current financial architecture, so you're not reliant upon a central clearing system or third-party intermediaries around that support it. And the idea then is that if you can remove that, you remove that cost,
Right.
which increases, one would hope, access to, let's say, in the capital markets.
Okay, so Maya, we're going to take out those intermediaries. So how is this stuff going to stay secure?
Well, let's go back to the theory and the practice of the
Okay.
ICOs. That was in theory. In practice, what is happening in the past year or so is that we're basically tokenizing all the intermediaries that we knew. The promise here was that if you look at the cost, the historical cost of financial products and the cost for intermediaries, they haven't changed in almost 200 years, despite all the talk of efficiencies through workflows, computer systems, markets, and so forth. The clearing and settlement on a blockchain is supposed to be something that happens a lot faster, no intermediaries in the middle, you don't have to pay anyone. It's almost like sending an email. Just you're sending a financial asset, a payment, a security, a stock, a debt, and so forth. De facto, what we're doing is a lot of these ICO projects are basically raising funds in order to become the intermediary that is needed because we're in the wild, wild west. So essentially, we're building all our intermediaries right now on the public blockchain, right? The cross-jurisdictional no man's land of Ethereum and Bitcoin that we all hear about.
Yeah, but that's just fiddling about. That's not how they're really going to work, is it?
No.
Okay, good. So, so can you hold on? Why?
Because at some point you do need to have compliance, you do need security, you need to know who you're going to trust, who's going to keep, and I'm sorry for the geeky talk, but in crypto land it really is like this, the private keys. Who's going to keep your tokens and make sure that if you lose the keys, you can still get it back, right? That you don't need to have this digital asset secured by some titanium box where you have a paper note of 26 digits that represent your private key.
Right.
And
So the tokens themselves are data that's exchanged between smart contracts, essentially, sitting on these channels. Those have to be in some way permissioned or private. We can't really run them on the public service. For the obvious reason that if we come up with some idiotic plan to tokenize some securities or something and put them on ERC20 tokens on the Ethereum blockchain, then eventually the Yakuza are going to start running CryptoKitty frauds that grind the whole thing to a halt. And
or just taking hostages.
Yeah, so it's okay to play around on these things to figure out how it works, but that can't be the vision for the future.
No, I mean, Maya's right. The next, or a battleground around this whole dynamic will be who are the custodians of those private keys? Who are the institutions that you trust to issue those to you and to manage them and to allow you to recover it, or them, when you lose it, and you will.
Okay.
And that's what you're going to see. I think one of the great races will be those entities which act now as our custodians or registrars will have to completely transform their business or they won't survive and become those key keepers.
Okay.
Can I just?
Sure.
I just want to elaborate on that. It's when we talk about the custody of these crypto keys or private keys, it's not only going to be about financial service. I think before long, this is going to have a lot to do with different information about companies and us as individuals that are going to be kept via these crypto keys, right? So you're not going to trust an institution to take care of your money, but also to take care of your information and your data. And in essence, this is going to be the next disruption layer where we're going to disintermediate, and this is the promise of decentralization of blockchains. We're not going to have the data hoarders as we know them, the tech companies, but we're going to disseminate the data between different parties and have different custody partners taking care of these keys and data.
Can I just ask one quick question about the investment side of this? So you haven't invested any of these yet, but presumably, I mean, you wouldn't have bothered to come along to this panel unless you thought this was actually going to be an investable class of assets. What has to change in this landscape in order for it to become investable?
I mean, so just like to bounce back on like the point on around custody, actually that's one of like the big issues for us. So, I mean, right now, to be honest, and I'm like discussing also with funds that are actually more like specialized in crypto, and that issue is like just a nightmare for everyone. I mean, right now, we would not know if we get like tokens allocated because one of our portfolio companies decide to like do an ICO. We would not know actually how like to hold those tokens. And I think like quite a lot of funds out there are going for like the kind of like cold storage with like, okay, multi-factor authentication, etc. But I mean, I don't think that's really like a sustainable solution. So that's one issue. I think then like just the definition of like what those tokens are. I mean, right now, I mean, you have the US who says that like actually all those tokens are securities. I think that Switzerland and I think the state of Wyoming, is that right? Wyoming. Came up recently with like actually like recognizing that some tokens are utilities, but for us, until like there is not like more clarity from the regulators on what those tokens are, it would be very difficult.
I think we have to be careful about drawing on those early examples. I mean, I've actually, it's because I have nothing else to do, basically, not because I'm clever. I've actually read the Wyoming.
Okay, I didn't.
and it will last 5 minutes in front of lawyers like Phil when they get hold of it, because the definitions in there are, you know, we're so far away from it. But I take your point there. So let me just ask one more question about sort of regulatory categorization. It seems to me there's also, so we've had this, I keep calling ERC20 because that's the Ethereum. So you have these three different kinds of tokens, but then you also have the ERC 721 non-fungible tokens, which I think has been underappreciated so far. But you see people beginning to nibble at that from esports and things like this as well. So the token marketplace as a whole isn't just people selling these pre-funded tokens in order to implement some sort. There's really a lot more to it than that, right? It's much more of a spectrum.
Yeah, it goes from digital collectibles, right? The virtual goods that used to live on Second Life to actual the ERC 722, which is the non-fungible tokens, is going to be has the potential to be like Class A and preferable shares and a means to actually do fundraising for mutual funds and hedge funds on a blockchain. So it can go beyond financial markets and things that need to be quantified to also things that can be computed.
Yeah. Okay, so I hope you're getting the picture. You've got this kind of cryptocurrency layer, which in a way isn't as interesting as the cryptocurrency people think it is, but as a platform for a token layer, which is actually much more interesting than the cryptocurrency people think it is. And on top of that, we can build a variety of products and services which use this new kind of bearer instrument in a more transparent market with a different kind of accountability to make more efficient and more liquid markets. Okay, right, good. We're all on the same page on this one then. Okay, good. Okay, so let's get on to the questions then. So the first question is there a vegetarian option? Someone's not really understood. Guys, can you really take this a bit more seriously? Thank you. Okay, well, we'll skip over this one. Okay.
There's a vegan coin.
Okay, good. I don't understand the question, so I'm really looking forward to the answer. What do you think of the CFTC Commission? What's the CFTC?
Giancarlo.
What's the CFTC?
Commodity Futures Trade Commission.
Oh, right. Yeah. So what do you think of the CFTC Commissioner's past statements that a token can possibly transform from being a security to not a security?
To a commodity, to payments. Yes, I am in complete agreement on that. I think when you look at what ICOs were, we spent 2017 trying to make all the tokens on the ICOs not securities, and we're going to be building the way, that's what my company is doing, for tokens to be securities.
Yeah. Why were we trying to make them not securities?
So that they would be legal and we won't get indicted by the SEC.
I forgot that bit, yeah.
But then Giancarlo came along, and Giancarlo, who is the head of the CFTC, basically said, listen, if right now we had payment tokens, utility tokens, for projects that only had a white paper and we had no assurance for them actually completing or building this product, it could in the future be that we are going to raise tokens as shares, i.e. equity, for a product, and once the product is actually exists, these shares or these tokens can be convertible to a payments method, right?
Oh, right, I understand. So, okay. Does the lawyer agree on this?
I do,
okay.
And this is the, I mean, you've touched
upon... It's not that I don't trust your legal opinion, it's just I've got an actual lawyer sitting right there.
This is, you've touched on the real challenge, which is, particularly in the US context, you've got the CFTC saying, all right, tokens, they're commodity bucket, but they could change form later on from being security to non-security or vice versa. You've got the SEC basically applying the Howey test, which basically means that all tokens are for securities laws purposes in the US a security, pretty much. And then you have other jurisdictions globally applying their own set of rules around how do you treat these things. So you've got the Swiss under FINMA, you've got the UK position, which is what it is. And so there are two things happening. One, there's a regulatory land grab. So you could see how it would be really attractive to be the regulator of choice. So you're the light touch, right place to go to get your token, quotes unquote, approved. Let's put it in the securities bucket, right? Which is fine domestically, or maybe fine in an EU context if we ever got there. Doesn't work globally though. Because, right now, the thing that we all worry about in the securities space is how the SEC would treat a token. Because you can't, in a decentralized world, you can't stop flow back. So flowing back in the secondary market to US persons, unless you implement some sort of barrier. And the barrier that people are looking at is using technology embedded into the system to prevent it. There are issues, Maya is very hot on the issues, but that's the basic premise and that's the goal. And what you're doing then is actually shifting the token world back into the current boxes that the SEC looks through to assess current securities, debt or equity or other, right? And so until you're going to get some sort of regulatory consensus, be it through the global sandbox or otherwise, you're always going to have to wrestle with this global patchwork, with the quotes unquote gold standard being that out of the US. So I think there's a huge amount of work to be done. I think it's achievable. I think technology will be part of the solution. Now, if we ever got to a situation where there was proper consensus at a regulatory level, that would be nirvana. I can't see it happening.
Yeah, well, consensus to them doesn't mean what consensus means to you. It's a different thing. I just want to say there's a couple of really good questions here about the use cases for tokens, which we're just not going to have time to discuss on the panel right here. But these, you're all around for the rest of the day, aren't you? So, yeah.
Or come to the session at 3:30 tomorrow.
Yeah. So I'm sorry, I'm not going to ask the questions about the use cases because they're too long and too complicated. I just want to get a couple more of these questions in. Okay, so here's a question from someone that clearly wasn't listening to what you guys said at the beginning. And it says, aren't you just replacing one intermediary with another? No, you're not, are you?
And yes, you are.
Well, what's the new intermediary?
Tokens.
No, yes, but the tokens aren't an intermediary like an institution.
Well, in some cases they are, right? You're buying a token, and by buying that, someone has assured that you are okay, you're KYC AML approved, or that you are a client of them somewhere off chain, so you have someone to blame for other financial services.
Oh yeah, no, we must have someone to blame.
Cover your ass.
Okay, that's a good one. What does London need to do to be a global leader in this space? So you said there's some jurisdictional competition here, so obviously we need the regulatory framework in place, but what else has to happen? I mean, do we have enough people? I mean, Shoreditch it's mostly sort of marketing people, isn't it? I mean, do they have people that
No, there are some
do this stuff?
I mean, look, I'll start and then. Well, I mean, what's been interesting, having lived through it for the last couple of years, has been watching how the FCA sandbox has actually worked in many respects, and it's become as a way to get fintech on the map in a way that becomes regulated and compliant. You've got all of the other global regulators now looking at that as a way forward, plus the drive to do the global sandbox, which is coming up.
So if all the regulators converge on a gold standard / boat anchor of the SEC, and we're all on the same.
But the beauty of that is the FCA's done it.
What else does London have to do to win at this?
I think it's keep going with the investment, and it could be Brexit related. So you might see some sort of incentives around tax and treatment that actually attracts investment and growth.
A Brexit token. How did we not? How did we not think of this before? This is the obvious thing to do. Where's the emergency on-call patent lawyer, Phil? We need to. Brexit token. This is going to be absolutely huge. No, I meant what do we need to do other than that? Because I'm guessing this stuff sounds sort of specialist to me. I mean, do we have people that know? Are you setting your thing up here?
No.
Oh, okay. Well, that's
and this is and one of the reasons is the Brexit uncertainty, to be honest,
you and your
talent
Brexit
that
uncertainty.
is looking where the regulatory framework can be. And again, that's not to say that the FCA isn't one of the most innovative regulators out there, including the Bank of England, but it's just unclear what's going to happen here.
I think you're underestimating our capacity for strawberry jam exports in the future. Okay, so let's ask a technical question here, which again, so it says, Maya, all of the cryptocurrency and token nonsense is going to disappear as soon as someone's got a quantum computer. Actually, I think someone has got a quantum computer, haven't they? It's just not a very big one, but they already have a sort of rudimentary one. What are you doing about that? Aren't you slightly concerned about Google and their quantum computer?
No.
Oh, why not?
First of all, there has been some initial work being done on quantum-resistant blockchains and cryptocurrencies. That's A. But B, I think we have a lot more closer fish that we need to fry before we reach into the quantum computing and have that be scalable and something that we need to take into account. For example, the crypto itself, the cryptography can be cracked before quantum computing cracks it.
Is this putting you off investing, these quantum computers?
No, I mean, quantum
Or are you investing
computing
in
for
the
now,
quantum
it's not
computers?
like something that we are looking at as a kind of investable space.
You
but
should
I
be
think
investing in it. The Satoshi Nakamoto's wallet on Bitcoin has got $16 billion in it, which nobody can get out because they don't know the private key. You could spend $15 billion building a quantum computer to get into that wallet, and you'll still make $1 billion profit. So you should be investing in it, is all
very
I'm saying.
true, David.
Be more forward thinking. Okay, here's quite a tough question, but I think I have to ask it because we're getting towards the end. When do you think tokens are going to be used by what someone here says, real businesses for real transactions?
I think sorry. Go ahead.
No, I think we are getting closer to it, actually. I mean, I think that...
Well, you're not. You haven't invested in any of them.
That's true. But I think that in an enterprise environment, we are starting to see actually like the use of blockchain, and it's not always like by actually issuing tokens, but there are like interesting use cases there. Then I think for like us to like use tokens for actually more like kind of interesting use cases than like CryptoKitties. I mean, the challenges around scalability need to be addressed, and that's like the biggest like question mark for me. I think there are like interesting things happening with like Lightning on like the Bitcoin blockchain and other projects around like also Ethereum scalability, but that's really like right now which seems to be beyond like the regulatory side that we discussed, like the other big bottleneck there.
What do you think?
I think it's already happening. I mean, ICOs are not just a way to get tokens, it's a fundraising mechanism, right? And the Telegram ICO that happened about 2 months ago is an actual company, was an actual product that probably about 60% of the people here have, and maybe I'm exaggerating, have Telegram on their phone. And they're going to have a token for you to send as a payment within about 18 months. And the ICO in itself was very properly done, in my opinion. It's not just to flip and pump a token in a market. That's one, and we're going to see more and more mature companies use tokenization in order to seek funding and also to democratize a lot of their products.
And what do they raise? They're raising like $2.2 billion or something with that?
Yeah, it started by being about 30 cents per token, and right now I think it's priced at 1.2.
So what is SEER and the rest so when everyone's buying tokens, what are SEER and the rest of the VCs going to do for a living?
That's a good question, David, but I think that at the very early stage, because right now if we look at the space, those projects that are going for the ICO route, the ICO is happening basically when there is a team of like 4 people and an idea and hopefully also a white paper that has been written, but that's pretty much it. I think that once like this whole ecosystem matures a bit more, the ICO will happen at a slightly later stage, and then it's about like how like an early stage investor like us can potentially add value on that journey from day 0 to actually that point where you issue the token.
So I think we were there around the summer. I think right now you're seeing companies that want to ICO raising initial seed funding to ICO. So they raise $2 million, get the team together, go beyond the white paper, have some MVP, and then they ICO. And so the ICOs have gone to be from $140 million. They've become much more modest, but they're still seed plus A, plus a token, plus an actual working product, and also the monetary policy that's going to be included in that.
Very cool. Well, look, listen, we genuinely could, I mean, I know people always say this in a very kind of patronizing way, but it's actually true. We could have spent 3 hours discussing this instead of half an hour. Listen, guys, these are people who really know what they're talking about. They didn't know what questions I was going to ask them. I really appreciated them giving their honest answers on a genuinely fascinating and important topic. Please join me in thanking them.